Americans aren't suddenly spending more because they love debt. Many are using credit to survive. Imagine payday arrives, bills disappear, and somehow your bank balance still looks almost exactly the same. Then one unexpected expense hits, and the easiest answer suddenly becomes a credit card for survival. Today, we'll follow one ordinary family and uncover how small financial gaps become expensive debt. The scary part isn't the first purchase, it's what happens after the balance starts growing. Meet Mike and Sarah, a working couple earning decent incomes but carrying almost no financial cushion. Mike gets paid Friday while Sarah watches rent, groceries, utilities, and insurance consume their paycheck. Nothing looks outrageous individually, but together these expenses leave surprisingly little room for financial mistakes. Then their car breaks down, turning an ordinary month into an immediate and expensive financial emergency. They need the car for work, so waiting isn't really an option for this family. With limited savings available, the credit card becomes the emergency fund they never actually built. The purchase feels temporary because next month's paycheck should comfortably handle everything for now today. But then groceries rise, another bill arrives, and the same card gets used again. This is where the story changes, because debt can quietly become part of everyday cash flow. According to the Federal Reserve, 59% of adults faced a major unexpected expense during 2025. The most common shocks included major vehicle repairs, followed by home repairs and unexpected medical expenses. That means emergencies aren't rare events. For many households, they're recurring financial tests every year, and when savings can't absorb them, borrowing becomes the bridge between one paycheck and another. Now look at America's bigger picture. Household debt reached roughly $18.8 trillion in early 2026. Credit card balances alone stood around $1.25 trillion at that time, nationally across America. Those numbers aren't just statistics. Behind them are millions of individual monthly financial decisions every month. Some people use cards strategically and pay their balances completely, avoiding interest charges entirely each month. The problem begins when the balance survives beyond the statement and starts collecting expensive interest. Suddenly, yesterday's grocery bill is still costing real money several months later after the original purchase. And the interest doesn't care whether the original purchase was necessary, optional, or completely unavoidable. Now imagine Mike pays only the minimum required amount on his credit card each month. His payment keeps the account current, but the balance can remain stubbornly large for years. That's because a minimum payment isn't designed to make debt disappear quickly or cheaply anytime. Here comes the hidden trap. Your credit limit can look like money you actually own. A $5,000 limit feels like financial breathing room even when your bank account says otherwise. That psychological difference can make spending easier and future repayments significantly harder for most people. And because the card works instantly, the pain of spending arrives much later than the purchase. Economists call this present bias. We value today's relief more heavily than tomorrow's financial cost. That doesn't mean people are irresponsible. Sometimes the immediate problem genuinely feels more urgent or careless. But repeated short-term solutions can create a long-term financial problem when emergencies keep repeating unexpectedly. Now add rising prices, and the same paycheck has to stretch across more expensive necessities. The Federal Reserve found 58% of adults said changing prices made their finances worse. Prices remain the most common financial concern among Americans surveyed in 2025. So even households earning reasonable incomes can feel their financial margin getting thinner month after month. Mike and Sarah aren't necessarily buying luxury goods. They're paying for ordinary life every single day. Rent, food, transportation, insurance, repairs, and healthcare can compete for the same limited dollars today. Then comes another psychological trap. Lifestyle costs often rise quietly when income increases without people noticing. A raise feels like progress, but higher rent, subscriptions, dining, and car payments can absorb it. That's why earning more doesn't automatically create lasting wealth by itself for most people alone. Wealth requires creating a gap between what you earn and what you permanently spend consistently. Without that gap, every emergency threatens the next paycheck surprisingly quickly and repeatedly, sometimes again. Now here's the part many people miss. An emergency fund isn't just savings when emergencies arrive. It's a shield that prevents temporary problems from becoming long-term debt by forcing you to borrow. Even a small cash buffer can give you more choices when something goes wrong financially. Instead of borrowing immediately, you can decide how much of the expense truly needs financing. Next comes the debt attack. Stop adding new balances while targeting the most expensive debt first. High-interest credit card debt deserves attention because interest can overwhelm monthly payments when balances remain unpaid. At the same time, keep essential bills current and avoid creating new late payment problems today. Then rebuild a basic emergency buffer so the next surprise doesn't restart the cycle again. The goal isn't perfection, it's breaking the connection between every emergency and your credit card. Mike and Sarah also discover something important. Not every expense deserves the same response either. Some costs are urgent, some are negotiable, and some can safely wait depending on the situation. Learning that difference turns financial stress into a decision-making process instead of reacting emotionally daily. Next, they examine recurring expenses that quietly drain cash every single month without notice. Canceling one subscription won't create wealth, but eliminating several recurring leaks can create breathing room. They also redirect part of every paycheck towards savings before discretionary spending begins. This changes the order. Instead of saving whatever remains, they spend what remains after saving. Over time, that small habit creates a financial buffer that grows automatically every payday. And once the buffer grows, the credit card stops being the first emergency option. There's another important lesson. Credit cards themselves aren't evil when used responsibly every month today. Used carefully, they can provide convenience, rewards, purchase protections, and useful credit history today carefully. The danger comes from treating borrowed money like permanent income instead of earned money permanently. That distinction separates a useful financial tool from a debt cycle in your everyday financial life. Finally, Mike and Sarah build a simple system: essentials, savings, debt payoff, then flexible spending. They track balances weekly, keep emergency savings separate, and avoid spending against future paychecks. Months later, the biggest change isn't their salary, it's their financial breathing room. Their car breaking down still hurts, but it no longer automatically creates new debt overnight. That's the real goal. Not becoming rich overnight, but becoming harder to financially knock down. Because when savings create breathing room, credit becomes a tool instead of a lifeline anymore. The lesson is simple. Financial freedom begins when your next emergency stops controlling your next paycheck. Your first goal isn't a perfect budget, it's creating enough margin to survive unexpected problems. Your second goal is reducing expensive debt before it becomes a permanent monthly expense. And your third goal is making savings automatic before lifestyle spending can absorb your income. When emergencies stop becoming new debt, your paycheck finally starts working for your future. If you enjoyed learning money the simple way, subscribe and keep building your financial future. Because real financial freedom isn't about having everything, it's about needing debt for nothing. Your goal isn't to eliminate every financial problem, but to make problems easier to handle. Start small. Build savings, control spending, attack expensive debt, and stop borrowing against tomorrow. Once your money starts creating breathing room, unexpected expenses stop controlling your entire financial life. The biggest financial win isn't earning more overnight, it's becoming impossible to knock down financially.